Tesla stock has been a mix of upward and downward trends. Shares of the car company were down 45% this year, after a near 50% rally in 2021 and a whopping 743% advance in 2020. The stock price has had to withstand a lot of pressures from the market, especially as several factors which are not directly related to Tesla's performance continue to drop the stock price. Hey guys, welcome back to Everything Tesla Stock. Almost all tech and growth stocks recently bounced much higher after the consumer price index showed signs of easing inflation. Tesla stock almost exactly matched the Nasdaq's wild 7.3% advance in that session, although it has been unable to capitalize on this boost since Musk's saga with Twitter keeps detracting the stock from its growth story and performance. Tesla's done several amazing works in the EV industry, and is growing at a pace that many of its competitors find hard to keep up with. In a recent interview with CNBC, billionaire investor Charlie Munger disclosed his bullishness on Tesla as a company, and how he thinks that the car company is performing higher than expected. What does Charlie have to say about Tesla? Find out in this video, but before you do, don't forget to like and subscribe and turn on that notification bell to keep up to date on everything that's going on with Tesla. Berkshire Hathaway Vice Chairman Charlie Munger recently spoke highly of Musk's electric vehicle company Tesla, calling it an amazing feat in the American auto industry. Munger stated that he is surprised that Tesla has performed so well, further reiterating the automaker's strong stance in the EV business. Tesla has become one of the most valuable companies in the world, with a market cap of over $600 billion. As of January this year, Tesla had produced a total of 1.91 million vehicles since 2009. The automaker manufactured 386,759 vehicles in the first 2 quarters of 2021 alone, and delivered almost the same amount at 343,000 vehicles in the third quarter of 2022. The automaker's revenue for this same quarter, ending September, was $21.454 billion, a 55.95% increase year over year. Tesla's revenue for this period was close to $75 billion, a 59.8% increase year over year. According to Munger, Tesla has made real contributions to civilization, and Elon Musk, its CEO, has done some good things that others could not. He had further cited that there hasn't been a successful new auto company in a long time, describing what Tesla has done in the car business is a minor miracle. Charlie Munger has had great investing track records in the past. At the Daily Journal's annual meeting earlier this year, the investor expert had predicted that considerable trouble was coming for investment markets. He stated that while there were people enjoying wretched excesses, it spelled danger for the economy. Speaking further on this, Munger stated that the great short squeeze in GameStop, the Bitcoin market at the time, as well as venture capital throwing too much money, were major factors leading to these excesses. He also explained that there was an excess in venture capital and other forms of private equity. Munger added that if the government prints too much money, it will eventually cause more trouble than any that has been seen in the past. And that is no doubt what's happening today, with inflation going at an alarming rate globally. As prices continue to increase across a broad range of spending categories, most people find that they spend more on buying commodities than they used to. According to the 12-month percentage change in the Consumer Price Index as of October this year, prices in the United States have increased 7.7% compared with October last year. With inflation on the high side, FED had recently raised its benchmark interest rate by 0.75 percentage points, which was the third outsized rate increase in a row, bringing the FED rate to 3% to 3.25%. In a recent note by Morgan Stanley about Tesla, the investment company stated that while Musk's ownership of Twitter could affect some consumers' sentiments regarding Tesla, any resulting weakness in Tesla shares could create an opportunity for investors. Tesla stock is currently valued below $200 and appears to be increasingly burdened by the several sentiments and controversies surrounding the Twitter deal, amongst several other factors. According to Morgan Stanley, controversy creates uncertainty, and one of the main drivers of Tesla shares to a high valuation status was the ability for investors to confidently model the economic outlook for the company's core EV and energy storage businesses, which is supported by a favorable economic backdrop. It added that this confidence has also been tested in recent times, and will continue to be tested through year-end. Also, while it may not be possible to quantify any potential impact that this may have on the Tesla shares, this is a regular topic for concern among many Tesla investors. Tesla's got incredible fundamentals in terms of car production, deliveries, earnings and revenue profit margins, and technology to mention a few. However, despite these factors, the automaker's stock still falls below $200, and it is uncertain when it will be able to record highs again. In the notes, Morgan Stanley cited that these sentiments can affect Tesla. First, in terms of customer demand, there could be some customers who may not wish to be associated with controversy. Likewise, Tesla's commercial partnerships may be affected. While Tesla is a highly vertically integrated company, it remains reliant on a host of commercial partnerships that may also not want to be associated with certain levels of controversy. The automaker's government relationships and support could also be affected, as well as investors' sentiment and capital markets participation. Tesla's industrialization of renewable ecosystems and onshore battery development requires close cooperation with sovereign entities, especially in the United States and China. Also, while the car company is largely self-funding at the moment, it will require a continued strong relationship with the investment community to achieve the growth implied in its current $600 billion market capitalization. The investment company further cited a $150 bear case for Tesla's stock price before the end of this year. It said, "We'll see a window of opportunity opening for prospective Tesla investors. Potential Tesla sentiment concerns and decelerating EV demand, particularly in China, could see Tesla test our $150 bear case before the end of the year." Morgan Stanley also believes that Tesla may continue to cut car prices in the future. It stated that its China team has commented on the recent significant price cuts in that market, and in response to this, it is expecting price cuts to follow in Europe as Tesla's Giga Berlin begins to surpass production of 5,000 units per week. Tesla will make use of any opportunity to lower car costs in the future by reducing production costs as well, but this is only going to work if the car company has a strong hold on its supply so that it can meet up with the increased demands resulting from the low prices of its EVs. Morgan Stanley added that in its $150 bear case stock price, Tesla shares could trade at approximately 12.5 times EV per earnings before interest, taxes, depreciation, and amortization, and 23 times PE on its 2025 forecast, which it sees as an excellent value for a self-funded top-line grower like Tesla that is in a top position to benefit from re-architecting the US renewable supply chain at scale. Tesla is taking a large percentage of the massively expanding EV industry, and this is not only in terms of market shares, but also profitability. Tesla had previously confirmed that its cars cost about $36,000 to make on average in parts and assembly, while it sells for about $10,000 or more, and that margin makes Tesla the world's most successful automaker in that respect. Tesla is also experiencing increased demands and is working out ways to conveniently sort out these demands. The automaker recently cut the delivery waiting time for all its Model 3 and Model Y vehicles to a minimum of 1 week. Prolonged waiting times have been a major issue for people who wish to buy Tesla cars, and with wait times reduced, demands for the company's EVs may scale higher. In similar news as well, Tesla made 8 times the profit margin per car sold compared to Japanese manufacturer Toyota. Tesla reported a 2022 Q3 net profit of $3.29 billion, while Toyota stated it made a net profit of $3.15 billion for the same period, despite the Japanese brand delivering 8 times more vehicles than Tesla in that period. It's evident, therefore, that Tesla is not only dominating the EV industry, but it's gradually becoming the largest automotive company in the world. What are your thoughts about Charlie Munger's statements about Tesla? Let us know down below, and don't forget to tell us what your valuation on Tesla is. If you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.